and welcome back to another video where I go over crypto, finance, and investing topics that I think are important and could be interesting to you guys. In this video, I wanted to go over something that's really important to long-term investing, and that's dividends. Dividends are key to long-term investing, and it lets you benefit from a company's success. I wanted to make a video solely on dividends because they're an extremely important part to growing wealth. So a dividend is a distribution of a company's earnings to its shareholders based on a decision made by the board of directors. This means that owning just one share of a company that pays dividends, you can get paid every quarter. And if you don't know what quarters are, it's a way to spread out time into 3-month intervals. Investing in a company that pays dividends can get you paid 4 times a year. Dividends are passive income, so hit that like button if you like making money while you sleep. Now, the reason why I want to focus on dividends is they're a key player in growing your portfolio. Companies aren't the only assets that pay dividends. You can get your dividends from ETFs and index funds as well. The way I like to think about dividends is that you're going to get rewarded just for investing in a company regardless of how many shares you own. So for example, if you're invested in Walmart, you're going to get paid quarterly dividends just for owning shares of their company. Dividend-paying companies are typically larger, already established businesses that can spare to pay their shareholders. Typically, smaller emerging companies are not going to be paying dividends because they're going to reinvest all of their earnings into themselves. Later down the line, they could declare a dividend after a few years of success. So to get to the numbers, companies will display their dividend as a percentage called the dividend yield. This will tell you what percentage of $100 will be paid out as a dividend per year as long as you hold onto any form of shares. So for example, if the dividend yield is 2%, every $100 you invested in that company, you're going to get $2 back every year. And the dividends can be regularly changed whether that company is struggling or they're having a lot of success. If a company is struggling, they can choose to either limit the dividend or cut it off completely to save as much money as they can. Companies that are doing well and finding success can increase their dividends whenever they want as well. So a few examples of good dividend-paying companies would be 3M, AT&T, and ExxonMobil. And remember how I said that dividends will be paid quarterly? There are actually some companies that pay dividends monthly. Companies structured as REITs or real estate investment trusts sometimes pay these monthly dividends. And an example of one of these companies would be ticker symbol O, and they pay a monthly dividend. Now, to use all these dividends that you'll be receiving, you're going to want to utilize D.R.I.P, and that is a dividend reinvestment program that's going to be available on most brokerages. All you have to do is just turn it on. A dividend reinvestment program will automatically reinvest the dividends that you earned from a certain company back into the same company to gather more shares. Your dividends will be reinvested back into the company that paid them, therefore giving you a bigger dividend payment every time they're paid out. The good thing about focusing on a dividend portfolio and buying companies that pay good dividends is regardless of how bad the market is doing, most companies will still be paying out dividends. So something to note about dividend-paying companies is you want to be aware of the ex-dividend date. This date marks the eligibility expiration of when you'll receive a dividend based on the time you invested. So for example, if the ex-dividend date is March 3rd and you bought shares on that date, you're not going to be eligible to receive the dividend of that time period. So if you bought on March 2nd or before, you'll be eligible to receive that dividend of that time period. Now, it's not going to be the end of the world if you miss a dividend payment because you bought the shares too late. Dividend investing is a long-term strategy where you can see the benefits of compound interest. So from my personal experience, getting that first dividend deposited into my brokerage account was something that really hooked me on long-term investing and utilizing dividend-paying companies to grow my wealth. And I hope me making a video highlighting dividends will really help someone out there in the long run to build their wealth as well. And with everything aside, it feels good to have these big companies pay you. Dividends are going to be really helpful in building your long-term wealth, and I hope this video gave you a little bit of insight as to how you can utilize those payments. As always, hit that like button if this video helped you out, subscribe for future content. I'm Kilimanjaro, and thank you